Hey everyone, welcome back to Corporate Decoder. Today we're diving into a 10K filing that's less about boardrooms and more about digital battlegrounds, but I promise this isn't your average social media drama unless you consider lawsuits and high stakes marketplace dramatic. We're looking at Rumble's report, and right off the bat it's clear this company is trying to position itself as the anti-big tech platform. They're talking free speech, creator empowerment, and taking on giants like YouTube and Amazon, but can they really make money doing it? Let's find out. First, some background. Rumble's claim to fame is its hands-off approach to content moderation, attracting users and creators who feel censored elsewhere. Their monthly active users, or MIUs, reached 68 million in the last quarter of 2024. While user numbers are up, the real question is how much money they make per user. Rumble's average revenue per user, or ARPU, is a paltry $39 per user. That's not a lot of money, especially when compared to the big players. But there is some good news, as this is increased from 0.28 Fent from the previous year. Before we dive into the numbers too deeply, there's something huge that happened just after the end of the year. Tether, yes, that Tether, made a massive $775 million investment in Rumble in return for a big chunk of Class A stock. At the same time, Rumble bought back $525 million of its own stock. Rumble divides its business into two main parts: Rumble Services, which is mostly the video platform itself, and Rumble Cloud. The Rumble Services unit is really three things in one. It's the main Rumble video platform, it's the Rumble Advertising Center, which they call their in-house advertising marketplace, and network. All of that has the purpose of better enabling the video platform. The reason they are building their own cloud is twofold. They want to own and control the infrastructure for the video platform, without having to worry about the unfavorable economics of AWS or Google Cloud, but also it gives them the ability to offer those cloud services to other companies. Now let's get to the financials. 2/3 of Rumble's revenue comes from advertising. That is down from the previous year, meaning they are growing their subscriptions and other initiatives, and they name one specific client that contributes a big portion of their income. They state that the aggregate market value of public stock was Dichu 468 million, which means it will not qualify as a large accelerated file. Alright, let's get to the meat of the filing, the numbers. In the year 2024, Rumble made $95.4 million. That said, their revenues the year prior were at $80.9 million. Not bad. They make money in a number of ways with advertising, subscriptions, and other initiatives like cloud computing. Let's look at the expenses now. Their biggest cost by far was in cost of services, which basically means what they pay content creators to make videos. For the year, it was about $130 million. Despite the amount of information they put out, Rumble is a non-accelerated filer and a smaller reporting company. What does this mean? It means they are not a huge company and are not yet required to give info as often and in depth. The CEO and CFO have concluded that their internal control over financial reporting was not effective as of the end of 2024. This is based on criteria established by the Committee of Sponsoring Organizations, COSO. This is because of material weaknesses, a serious problem the company's controls. Let's talk about risks for a moment, because that's a big part of these SEC filings. One of the biggest is the sheer competition. Rumble is going up against companies with way more resources. Remember all that talk about Tether? This section outlines specifics around that transaction in February of 2025. It also states that the company only invests in financial instruments with maturities of 12 months or less. There are several ongoing legal proceedings, including a class action lawsuit, a contract claim, a defamation lawsuit, and an antitrust lawsuit with Google. As a company, Rumble is largely controlled by a single person. As CEO and biggest stock owner, Chris Pavlovski has final say on pretty much everything. In general, many of the risks the company faces are not uncommon and are quite similar from year to year. Rumble's commitment to diversity of opinion and refusal to censor content that does not violate their moderation policy has resulted in media campaigns and boycotts against it. To fight back, it has filed a lawsuit against the World Federation of Advertisers, as well as the advertising agency WPP and its subsidiary GroupM. Of course, one of the biggest risks is also the fact that Rumble Cloud, a new venture, may not be a success. The company also needs to enhance its protection against cyber attacks to avoid things like information theft, data corruption, operational disruption, and or financial loss. As an open platform, Rumble relies heavily on legal protections of Section 230 in order to avoid liability for content created by third parties. The Code of Business and Ethics will provide clear guidance on how the company can ensure ethical behavior. It is interesting to note that in this report there is a full section about cybersecurity. They have a dedicated team, do security assessments, use third-party vendors, and are regularly updated and trained on cybersecurity matters. Now, digging deeper into those financials, while revenue is up, the loss from operations increased substantially to over $130 million. In general, it is a big trend for Silicon Valley style companies to ignore financials to focus on user growth. We can see how well Rumble has adopted this approach. There is risk they cannot meet their reporting obligations, which could hurt their operating results. Their Bitcoin strategy adds another layer of risk. The value of Bitcoin is unpredictable, and bad moves here could hurt their bottom line. As they expand internationally, they will be subject to new and different regulations, and being forced to adhere to those laws could negatively impact business. The CEO might be thinking short term because of how his shares vested Chefthio. Okay, so what's the overall picture here? Rumble's trying to build something different in a world dominated by tech giants. They're betting on free speech and creator independence, but that comes with its own set of problems like heavy expenses. The investment from Tether is clearly a game changer. It gives them the capital to really compete. It is a bold bet, one that could pay off if they keep growing their user base and finding ways to monetize it. Rumble faces real challenges, strong competition, negative media campaigns, and the need to build robust systems and internal controls. But if they can navigate these risks, they might just carve out a significant space for themselves in the digital landscape. What do you think about Rumble's future? Let me know in the comments below. And as always, don't forget to like, subscribe, and hit that notification bell for more corporate deep dives. Thanks for watching.